Hello everyone, it's Paul here. I hope you can hear my voice. Hope you can see my screens or the charts. We'll look to begin in a few moments. There's always a few last minute stragglers coming to join us, and we'll look to begin then. And as I said, hopefully you can hear my voice. Hopefully you can see the screen. I'll just bring up my slides for this evening event. Hopefully be able to see those as well, he says. So hopefully you can see the charts. You can you can see the charts. You can see the slides and hear my voice, and that's a good start. And as I said, we'll just look to begin in a couple of minutes. Just let the last one or two people come into the room. Okay, good evening, everybody. It's Paul here. Here we are on Tuesday, 27th of February, here for the next in the 2018 Value Trade series of webinars. And here we're going to talk this evening about welcome to crypto trading. Of course, the words crypto and Bitcoin have been pretty well, in fact, they're never out of the news these days for one reason or another, and so they're very keen. There's an awful lot of focus on it, and what we're going to look to do is to give you a little bit of a insight this evening into sort of cryptocurrencies, and then also give you a little idea and a sort of insight into crypto trading, and also what value trades can offer you in terms of being able to engage with those markets. So as always, I'm going to start with a quick risk disclaimer. CFDs and FX are leveraged products and carry a high level of risk to your capital. It is possible to lose more than your initial deposit, and you may be required to make further payments. These products may not be suitable for all clients, so please ensure you fully understand the risks involved. So yeah, as I said, ladies and gentlemen, okay, it's fair to say that the words Bitcoin and cryptocurrencies, they sort of entered the public consciousness last year. It was rather an exciting and tumultuous year for both Bitcoin and cryptocurrencies, and we'll talk a little bit about that later throughout our session. I appreciate that some of the people joining us this evening, some of you may be experienced, crypto investors, cryptocurrency traders. Some of you may be, and this might be your first, exposure to it, or your first sort of interest in it. So hopefully we'll be able to sort of cover the broad spectrum of experience and trading knowledge within the room, and be able to give you a little bit of guidance and insight that you can take away to sort of help develop and evolve your own trading styles. So what am I going to talk about this evening for about the next sort of 40 to 60 minutes? Well, things we're going to discuss are, what exactly are cryptocurrencies? As I said, some of you may be well aware of them. Some of it might be their sort of first exposure to it. We're really going to talk to you a little bit about what are the main differences between crypto instruments and normal trading instruments. So things like CFDs, FX, and commodities. We're also going to touch upon the sort of value trades crypto proposition. What are value trades bringing to their clients? Some of the exciting sort of offerings that they have, and what value trades can offer their clients in terms of what particular cryptocurrencies and actually how you can engage within this sort of new and exciting markets. We'll also talk a little bit about what skills are transferable from trading currency in terms of normal FX currencies across to trading cryptocurrencies. And if there's a bit of time there at the end, what we'll do is, I'll switch across to the Value Trades MetaTrader 4 platform, and we'll take a look at the Value Trades crypto trading proposition. As always, if you have any questions, just put them in the chat box, and I will answer them as I can as we go along. We also have as always, they have the Value Trades account representatives who are joining us here, and they will be happy to answer any particular questions that you may have, whether it be about this in terms of cryptocurrency trading, or in terms of understanding what Value Trades can offer you, and they'll be very happy to talk you through your particular questions. So cryptocurrencies, what are they? Well, I'm going to give you a little bit of just a very brief insight, a little bit of a brief history, okay? I want more to focus on the trading aspect, but I realize that, as I said, as they've come into the public consciousness, some people will have a wide range of background and knowledge of it. So I want to just help give you a little bit of insight there. So, what we're thinking about here in terms of cryptocurrencies is, a digital currency. And why would that actually be of any importance? Why would that actually really be of any interest, in the first place? Well, I'd like you just to sort of take a moment to think about it, ladies and gentlemen, and to realize that actually most of us we are digital natives these days, okay? It's a kind of an interesting term for us all, but we are considered to be digital natives. And if you think about that, looking at how let's say certain physical formats have changed over, only the last 10 to 20 years. If you look at letters, okay, in the old days, we would write a letter and send it through. Now, pretty much, all communication, or, the vast majority of communication is electronically, through email or texts. In the old days, for things like books, okay, you would go to a library, you would have to buy, a book. These days, you can actually download both books and also your films. Those of us of a certain maturity or of a certain vintage can remember having to go to places like Blockbuster to actually have to sort of hire a video to watch at home. Well, these days now, I can digitally download books and films anywhere in the world, okay, pretty much anywhere at my fingertips. And the same goes for music, okay. You know, the long gone are the days of teenagers hanging around record shops, or in the 80s buying CDs. Nowadays, once again, our music has pretty much gone into the sort of the digital format, and we're able to sort of download it and have it as and when we want it. Same with cameras, okay. In the old days, you would have cameras, and when we would be expected to go and take your film to get processed, and that might take a few hours to a few days. Nowadays, with our smartphones, we have the ability to take, not only take photographs wherever we want, but actually also to be able to sort of disseminate them, throughout the global internet. So if you think about it, we are digital natives pretty much these days, and so actually a move towards a digital currency shouldn't really be any different, shouldn't really be any surprise, and actually is something that, as with all these things, may well offer opportunity for us if we are suitably educated and in a position to take advantage of these technological changes. So, when we talk about a digital currency, how do we define that? Well, what we're looking at is, the digital currency is using encryption techniques to A, to be able to regulate the generation of units of currency, and B, and verify the transfer of funds. All right. So it's as we dig into a little bit more detail, okay, it's about the generation of units of currency. Okay. It's not the sort of old of day to sort of having to pour out gold into coins, or having to sort of generate the printing presses for paper currency. These currency, digital currency is the ability to be generated electronically and also managed, but interestingly enough, also verify the transfer of funds. And that is something we're going to touch upon a bit more, because it's one of the things that gives cryptocurrencies their strength in the modern world. By allowing it to do that, okay, what it allows to do is, allows those digital currencies to operate independently of a central bank, which is a major reason why they're so popular with many people, and that it is, it provides a sort of an independent currency without any form of manipulation from, let's say, certain agencies. And we'll touch upon that a little bit more, because all of this feeds into the sort of the flavor, the color that, I want to sort of provide about why cryptocurrencies are of interest to us, and what we can actually do with them. So as I said, let's have a very brief history lesson, okay? And it is, I appreciate that, within the time I have available here, okay, that, we're having a very brief history lesson, but, there is plenty of interesting blog posts, and will also be a little video post as well as this upon the Value Trades website. So be sure to keep on top of that, keep on board of all the great stuff that is created and generated for clients there. But presently, what we use at the moment are, fiat currencies, okay, and they're created, issued, and controlled by primarily central banks, but also some of the major financial institutions. Back nearly 10 years ago, when we had the GFC, the Great Financial Crash, that led to quantitative easing, which was effectively the ability to sort of create, massive creation of currency electronically, with that being able to be pumped back into the system to effectively sort of put oxygen back into the financial ecosystem. What we've realized and what we've seen over the years is that, that quantitative easing, that ability to sort of create currency electronically and just feed that into the ecosystem, into the economy, was good for politicians. It allowed them to be seen to be doing something. It was good for central banks, because it gave them a lever to pull and allowed them to sort of look as if they were being proactive. It was good for the banks and the financial institutions, because the vast majority of that currency found its way to those, firstly in order to sort of repair their balance sheets, and then in a way to be able to allow them to use that money to profit. And it tended to be good for asset holders. If you had a portfolio of assets, it tended to be very good for you. The problem is that it wasn't so it wasn't so good for everybody else, and this was kind of one of the let's say the themes that led to the sort of drive towards an uncontrolled digital currency. So as I said, it was very happy for those people who were in, let's say, asset holders, or as we saw many years ago, sort of complaining about the 1%er, or the establishments in control of finance. But it wasn't so good for everybody else, and invariably this has led to many individuals and organisations looking at ways to address this and looking at how would that kind of level A of control and manipulation could be avoided in the future. And what actually happened was, what came out of this in 2009, a Bitcoin protocol was released from either an individual or a collection of kind of software engineers. That Bitcoin protocol sat on a blockchain that allowed transactions with their digital Bitcoin currency to be completed. Interestingly, as I say, this was happening just as the great financial crisis was causing, a clear amount of havoc throughout the existing financial business, existing financial ecosystem. So one of the things that wanted to be covered, one of the things that wanted to be brought is, the kind of the gap that Bitcoin and blockchain fills is in a word, trust. What had happened is, lots of people had sort of lost trust in the establishments that we had seen beforehand. And so it's not a surprise that out of that lack of trust was a system, a new ecosystem was created that would allow that sort of global currency and cash exchange to occur, but with the trust and the verification of funds. So many of you might have heard of Bitcoin, but trying to understand, well, what is the blockchain, all right? Well, basically the blockchain is an open distributed ledger that can record transactions between two parties efficiently and in a verifiable and permanent way. And that is one of the key strengths of it. It's verified and it's permanent. This list of records is secured using cryptography and is immutable, okay? It's exceptionally difficult to change. And because it happens on a peer-to-peer network that is decentralized, it cannot be controlled or manipulated by a single party. So, blockchains are, by their design, very secure, and they cannot be hacked due to that particular design. That makes it a very attractive proposition. And what that means is that blockchains are both permissionless and trustless systems by design. And this is what has attracted an awful lot of interest as the sort of the world changes, shall we say, and as that, let's say, existing establishments are found to be struggling. Well, as we find, through our period of a creative deconstruction, that invariably new opportunities, new technologies, new ways of working start to come to the fore. And it might be said that cryptocurrencies are one of those. So the blockchain becomes effectively a growing list of records called blocks. Think of it like a big spreadsheet that's out there in the cloud. They're linked and they're secured using cryptography. And each of that block typically contains a sort of a hash pointer as a link to a previous block, a timestamp, and transaction data. And this is key. That's what allows these transactions to be verified. So by design, blockchains are inherently resistant to modification of the data. Think about it. That spreadsheet is replicated all over the world so it's very difficult to tamper. So the actual blockchain is secure. It's very secure. The weaknesses that have been discovered have been exposed elsewhere, things like hacking, burglary, assault, and we'll touch upon that a little bit later. So of course, with any sort of a new technology, well then invariably, it starts to develop its own language, its own lingo. So some of you may well be aware of these words. For some of you, this might help just give you a little bit of ability to understand some of the cryptocurrency lingo. Well, when people talk about tokens, well, all coins or tokens are regarded as cryptocurrencies, okay? Tokens are the representation of that particular asset or utility, and it usually resides on top of another blockchain. So when people talk about Bitcoins, that's what it is. It is simply a token. You very often hear people talking about ICOs, an initial coin offering, which is normally a means of crowdfunding, the creation of a new cryptocurrency that can be a source of capital for startup companies. And there are particular investors, I would say more investors and traders who are particularly interested in ICOs and how they utilize that to sort of get engaged with new cryptocurrencies. Not surprisingly, a wallet is just like probably the wallet you have in your pocket at the moment. But what we talk about is a secure digital wallet used to store, send, and receive the digital currencies like Bitcoins. If you hear people talking about cold storage, that's about where they move their cryptocurrency offline. So they're moving it away from their online crypto broker to protect that crypto from being hacked. If you hear people talking about altcoin, well, realistically, that has basically come to mean any cryptocurrency that is not Bitcoin. You'll often hear people talking about HODL, all right, HODL, and really what happened is that actually started out as a misspelling. When someone was trying to explain they were looking to hold on to their crypto, and it became a little bit of a slang word for crypto investors that they were looking to be hodlers. With some of the recent volatility, it's also come to stand for hold on for dear life, ladies and gentlemen. But we'll look at that a little bit later down. One of the elements that we have seen, we saw last year, the latter half of last year, was a fork. And forking is said to happen when a blockchain splits, normally into two branches, and that can happen as a result of a change in consensus, the algorithm, or some other software changes. And I'll touch upon a little bit that just as we go through one or two of the other slides ahead. So, within that blockchain, what we've seen is, the rise of the coins, the rise of the tokens. And, some of these companies, they have, that can provide that kind of digitally encrypted transactions. It's become almost like a new gold rush of this decade. And certainly the energy and the momentum and speed that we've seen of that has only just increased over the last 12 months. The main one has been Bitcoin, and even if you're not a crypto investor or trader, there's a good chance that you probably have heard of that, all right? And in the last 12 months, as it says there, the name, if maybe not the concept, has entered the modern everyday lexicon, all right? Most people will have heard of Bitcoin. They may not truly understand it. They may not actually truly understand why it has a worth, but, the name has entered, as I said, the public consciousness. But the interesting fact to remember is that the blockchain can handle data transactions more than just dollar values. It doesn't have to be Bitcoin, all right? And that's what we're going to touch upon that, because this is what starts to make some of the other coins more interesting to us. And as the number of Bitcoin users increased, so what we're looking at is we've basically from 10 million in November 2016 to 18 million in November 2017. There was a meteoric rise in Bitcoin value, and I'm going to show you one or two charts on that in the next couple of slides. Bitcoin is considered the cryptocurrency, but there are others which, as we touched upon, they're known as altcoins. So, some of you may have heard of Ripple, Litecoin, Ethereum, Dash, Digital Cash, and we're going to look at that a little bit more in a few slides on, all right? But the last year has been the rise of the coins, and it has been led by Bitcoin itself. So when we look at, what gave cryptocurrencies the power was in the fact that they're able to offer almost like a digital fingerprint that allows the transactions to take place in a secure peer-to-peer network without prying eyes. Some of the latest coins, even things like Ethereum, they offer smart contracts that have requirements that need to be met before the transaction will complete. We'll touch upon that a little bit further along. And what that does, it starts to open up the ability to have even such complex and important transactions as things like house ownership or notarized legal documents. They can be safely and securely handled within the blockchain of distributed ledgers. And this starts to open up all manner of possibility and opportunity for new ways of doing work. And what I believe it means is that, it means that the blockchain and the cryptocurrencies, they're here to stay. And I suspect that we will find that they will only become more popular, even with some of the, let's say, some of the challenging trading market environments over the last few weeks. I think what you'll find is the technology. The technology is here to stay, and in fact will probably only increase in popularity over the next few years. But what I would also admit is that, as an investor, to try and sort of make a kind of long-term, a long-term guesstimate about what might happen with that is very difficult, because the market has, part of it being decentralized, the market moves very swiftly, and and will move in directions that perhaps we are not ready or prepared for. But the reality is the technology is here, and that's what we need to embrace and understand and start to look at, well, how do we turn that into an opportunity for ourselves? So, Bitcoin, cryptocurrencies, they offer two attractive alternatives to the present fiat currencies, okay, like the dollar. Speed and security. That's the thing, speed and security. And the technology lends itself to make an even greater impact in the world of international online payments. Amongst others, we just talked there about notarized documents, house ownership, etc. The challenge that we're going to have, okay, the challenge is that, all of those elements mean that blockchain is unable to be controlled by governments, central banks, okay, and just normal banks and other financial institutions. All right. So, of course, invariably, they're used to having that control, and people don't tend to give up control very, very easily. And it's just a little bit of an interesting aside here. In 2016 alone, there were $7.7 trillion credit card transactions. Right? And what we have to realize is that banks and financial institutions, hundreds of billions in fees and interest. So invariably, they're not going to want to give up that rather lucrative and profitable business without a particular fight. So not surprisingly, that has led to some of the challenges and rumors of government interference and impending regulation. And we have seen let's say, murmurs there from regulatory bodies about it. We've seen moves by countries like China and Korea to try and control cryptocurrencies, etc. And I think as the blockchain and as cryptocurrencies increase in popularity and in their ubiquity, then invariably there will be ways that organizations, governments, countries wish to be able to either regulate or control, or at least be able to get their slice of the pie. So what does that future hold? Well, it's some interesting stats, okay? Since 2009, the volume of transactions on blockchain has doubled every year. And there's not really any reason to see to doubt that trend will change. If anything, it actually may increase. So think about that. The 2009, the volume of transactions on blockchain has doubled every year. And furthermore, because of that open source nature of the blockchain, it's encouraging people and organizations to help develop it and make it bigger, faster, and stronger. So, invariably, it's just as we see that grow, that is going to, it's going to pervade every aspect of our lives. And invariably, that will also create threats and opportunities. And as traders, we're always looking for an opportunity. It's already having a knock-on effect on financial markets, and that's likely to only increase over the short to medium to even to long term. As we touched upon before, the companies like Ethereum, that have companies that are working on developing the ability to store property rights on the blockchain. And property rights go to the almost the very core, the very heart of democracy, also the very heart of, almost straight back to if here in the UK, straight back to the Magna Carta, being able to understand and verify property rights. We're also starting to see companies using blockchain to help manage and develop supply chains. We live in a connected world. Those global supply chains, are, they underpin pretty much, huge amounts of what we do. And so I really think that, it means blockchain and cryptocurrencies, they're here to stay. All right, they're only going to become more popular. Yes, there may be changes, as in which is the particular cryptocurrency of that's in favor at that time. But the reality is the technology and the blockchains, they're here to stay. They're here with us, and so it's our job as traders to work out how can we start to turn that into an opportunity. So as we just said, there's clearly a bright future, but the reality is, so what? We're traders, okay? We're traders. We're interested in knowing, where is this opportunity? How can we utilize this to generate returns for ourselves? So I'm going to break it down into two simple ideas. Either individuals are investing or they are trading in cryptocurrencies. I'm going to take a little brief look at both of them, but not surprisingly, because the nature of where we're going with our presentation this evening will focus mostly on trading. So, investing in crypto. These are the people that you'll quite often hear referred to as the hodlers, okay? And they're holding on for dear life for some of them. Most people are looking to investigate those upcoming ICOs, or initial coin offerings, to buy into new offering, all right? What happens, though, is that it can be very fraught. It can be quite hit and miss as a way and a means. It's just the nature of heuristics that we have a survivorship bias, so an optimism bias. So invariably, when someone buys into one of the ICOs that has taken off and done well, we hear about it everywhere. But what we also don't hear is about the sort of the ICOs that that either peter out or just go nowhere. Or people are looking to invest and hodl into cheaper altcoins, Bitcoin being either deemed to be too expensive or people believing that it's overvalued already. So, if you look at this in old world investing parlance, most are looking to invest in growth stocks that will work out for them over time. Hodlers are looking to hopefully ride out that volatility that is inherent in cryptocurrencies. And as you've looked at any sort of charts of the cryptocurrencies, you'll see that we have seen a volatility in abundance, and it's one thing you have to be aware of and ready for, is to be able to embrace that volatility within cryptocurrency markets. So if you want a very, very simple way to think about it, it's in sporting terms. When investors in cryptos, they're like baseball players, all right? They're hoping to hit a home run, whether buying a cheaper altcoin or they invest in an ICO, they're hoping to hit that home run, all right? Whilst maybe forgetting about the many strikeouts that any normal baseball player would have. So that's all about investing in cryptos. As I said, let's actually look more about trading cryptos. Let's see about how we can utilize that, how we can do that, all right? So there's been phenomenal growth in Bitcoin altcoins over the last 12 to 18 months, right? Not only in terms of the volume, in terms of the people engaged, but also in terms of the price action. If I just look back here it's been a remarkable 12 months for Bitcoin and the other coins, but we'll look at Bitcoin here. If I think about just a little over 12 months ago, okay, January 2017. Bitcoin was trading at approximately between about $900 to $1,100. That's where we were. Within less than a year, okay, the highs of December 2017, Bitcoin hit a high there of from Bitfinex broker there is 19,891. So just think about that. In less than 12 months, we'd gone from 900 to 1,100 up to 19,891. So invariably, if you'd bought a long time ago, you were sat very, very happy. However, in the last 2 months, let's say since sort of mid-December here towards the end of February, well then invariably, we saw rather a challenging sell-off within that Bitcoin. And at this sort of end of January, so a year on, Bitcoin was trading, and this is from our own broker Value Trades. Bitcoin was trading at $10,000.69. So it's an interesting, if you just look at those those 3 dates and those 3 numbers, well, invariably, if you'd have bought in January 2017, and let's say you'd bought an average price of $1,000, even though, you had risen up to close towards $20,000 by the end of December, even though they sell off there in sort of December and January, you're still sat on, 10,000, Bitcoin's worth $10,000. So, you effectively made a tenfold return on your funds within a year. And so whilst people might feel pain about giving back let's say the 19,890 down to 10,000, it's still have been sat on a 10,000, still have been sat on a nice 10,000 or tenfold, profit. Invariably, there will have been some people who have bought at the highs and they will have been struggling. But of course, as we had that move in the last couple of months, the question is, well, is that the opportunity over? All right. Was that the bubble that burst? All right. Well, for some investors, that might be the case that Bitcoin bubble has burst for some investors, depending upon their own particular risk profile and what they're looking to achieve. But remember, we're traders, all right? We're traders. We're not overly concerned about, the direction. What we want to be is we want to be versatile traders, which means that we can trade any instrument on any time frame in any direction. And so some people will have looked at that, that move down from the highs of December 2017 to January 31. Some people will have looked at that and been rather put off cryptocurrencies. Other people will have looked at that and thought, well, that was a fantastic trading opportunity. So let's have a little bit of a look. Let's have a little bit more of a look in depth in what is available and what we can actually do to sort of turn it into a good opportunity for us. So, firstly, we can have a little bit of a look at, what's the comparisons between, some of you who may have had no experience of trading cryptocurrencies at all, as opposed to some of you who may have had experience in trading things like, foreign exchange currencies, okay, and indices. So what is positive in terms of, trading cryptocurrencies? Well, firstly, there is volatility, all right? And as private traders, we are looking to have access to volatility. Volatility becomes our lifeblood. But, invariably, we are admittedly also looking for a little bit almost like a Goldilocks situation, all right? We have no volatility. That means there's not really a move there we can build a position on. But, subsequently, if we have far too much volatility, that makes a rather challenging trading environment. But for the general part, there is some great volatility within cryptocurrencies which allow us to sort of employ trading strategies. In terms of, easy entry and exits, well, yes, it's particularly easy to sort of look and trade them, all right, in terms of the ability to get exposure to cryptocurrencies. We have limited costs, all right, in terms of, if you are particularly if you're a hodler, whilst there are some specific costs for brokerage costs to buy, as a general rule, there's limited costs in terms of, being able to hold your positions. And kind of one of the interesting thing in terms of a positive for cryptocurrencies is that is insulated to conventional stimuli. So what does that actually mean? Well, if we look at FX, if we look at normal, currencies, if we look at indices, if we look at, let's say the mighty dollar, well, they don't trade in a silo. They have the ability to be influenced by conventional stimulus in the external world. So this afternoon we had the new chairman of the Federal Reserve, Mr. Powell, was talking, and invariably that had an impact. Okay, that was a stimulant on both the dollar and other currencies, and also on some of the indices. So that has it, whereas cryptocurrencies don't actually have that whatsoever. On the flip side, the negative cryptocurrency considerations that you need to take on board, well, what we've seen is, we've seen challenges with hacking in the past. Okay, we've talked about it. The blockchain is, exceptionally secure and is exceptionally resilient. Any of the challenges we've had with hackings has been at either the broker or at the individual level, and you need to be aware of that and take care of that. But also, to take into consideration about things like glitches and downtime. Remember, cryptocurrencies, it's a digital currency. It's a purely, technological solution. So invariably, that means if there are issues with either connectivity or, within the internet as a whole, that invariably that can have those glitches and downtime might have an issue upon your ability to sort of manage positions. And then there's also this sort of availability of leverage. We are actually hovering the, we have leverage as, when we trade, foreign exchange and indices, but as a general rule, okay, within cryptocurrency and holding that, you're looking to sort of, there is the lack of leverage and you're looking to buy on a one-to-one basis. So we've had a little bit of a talk there about what's coming forward, what's available, but let's have a look and talk about what is actually Value Trades offering. What Value Trades? What are we bringing to the party? How are we offering some of these new and fantastic and exciting instruments? So Value Trades are now offering the opportunity to trade, let's say, the major cryptos. The major as of February 2018, as I said, looking at the future is trying to sort of take a long-term view of the future is somewhat challenging when things move so fast. But as of February 2018, we're looking at being able to offer our clients the opportunity to trade the major cryptos. So we're looking at BTC, Bitcoin, Bitcoin Cash, which is what was created after the fork in Bitcoin last year, Dash, the sort of digital cash, Litecoin, Ethereum, ETH, and Ripple, XRP. And interestingly, that you just want to sort of take on board and make note of, you can trade them against the US dollar, or you can trade them against Bitcoin. Just be aware of that. Now, some people might say, well, why would I want to do that? Why would I want to trade against let's say Ethereum against Bitcoin as opposed to trading Ethereum against the US dollar? Well, certainly last year, okay, when there was when we had, really particularly strong upward trending markets, well, invariably, what we had there was a case of people wanting to realize that, when they were trading against Ethereum against US dollar, it might have been a case that the US dollar was going down and Bitcoin was going up. And invariably in those days, people were wondering that, Bitcoin for immature traders were thinking that Bitcoin was only going in one direction, and why would people want to expose themselves to US dollar? But the reality is, personally, I don't think myself that it makes as big a difference as people like to say, especially in the sort of market environment we're in at the moment. What we have to remember is that, this is Value Trades, they're offering these cryptocurrencies almost like pretty much exactly like a CFD trade. So what it allows you to do is it allows you to fund your account in your normal currency, and also be able to trade in that currency, settle in that currency, and then also be able to withdraw in that currency as well. So I don't think it's as big an issue as some people would suggest. But what I think is that there will be some sort of, let's say, experienced traders who may be interested in arbitrage opportunities between Bitcoin and the USD. So, with Value Trades offering all these, fantastic new cryptocurrencies, what are the advantages for using Value Trades as your main sort of trader of cryptocurrencies? Well, firstly, you have those 6 cryptocurrencies to trade: Bitcoin, Bitcoin Cash, Ripple, Litecoin, Ethereum, and Dash. And what it means, as we just talked about, it operates like a standard CFD trade. So, you're able to fund, okay, your account as you would normally if you were trading just normal currencies or indices or stocks or commodities. And also, and interestingly, it allows you to withdraw in terms of your regular currency, just like a normal CFD trade. What that allows you to do is it allows you to basically focus on speculating. There's no physical risk in the terms of, you're not actually holding an altcoin where there may be, let's say, a volatile move in the underlying value of that particular asset. You're just able to sort of speculate and use your trading skills. Furthermore, there's no physical risk from hacking. As we said, blockchain, Bitcoin are secure. The hacking or the trouble has happened with some of the specific crypto brokers or particular individuals who have been hacked. You don't actually have that when you're trading it as a CFD through Value Trades. You also have the ability to have swift return of your capital from value trades, a stable broker. And an interesting thing as well is that value trades are providing negative balance protection for their clients' accounts. This becomes, very interesting, very useful, particularly useful given some of the extreme volatility we see on occasion within the cryptocurrencies. So having that negative balance protection allows you the opportunity to trade with an element of peace of mind, of knowing that you will be, you won't be able to get yourself into too much difficulty. So, we talked a little bit what's available and what value trades can offer, but, how do we actually trade it? All right. How do we actually trade it? What are we actually looking to do? But what we've found in the past was that in old-fashioned terms, I talk about it being old-fashioned terms, many crypto traders were using momentum strategies. They were hoping to catch a breakout, enter that market and ride the move to its next all-time high. And there will have been a lot of traders in, let's say, 2017 who will have actually done that and managed to achieve that very, very well. And, when it's worked, it has worked especially well. It has worked especially well. And, some people might say in the last 2 months, those momentum trades have all been to the downside. But, even whether it's been in a strong uptrend or a strong downtrend, it can be an element of a roller coaster. And I would suggest anyone just to have a look at the Bitcoin charts for the last 8 to 12 weeks. You'll see that there has been volatility, but within that volatility, there have been strong moves to both the down and the upside. And so it helps us to give us opportunity, but we need to be educated to know what we're actually doing. What has surprised many traders of cryptos, many crypto traders, is that actually charts and technical analysis has continued to work well in these markets. Some people would have suggested that they would not have had technical analysis, would not have had a place, or price action would not have had a place within these markets. But what actually has happened is in many ways the price action technical analysis has worked exceptionally well in some of these cryptocurrencies. And what we think about it, if you think about it, it stands to reason that invariably there are not many of the sort of algos operating in cryptos. Okay, the vast majority of that trading is still being done by humans on a human basis, and all humans, we need an ability and a way and a means to make our decisions. What we've also noticed is that because of that volatility, compression triangle patterns have offered lots of opportunity, and maybe we'll have a look at one or two of those if we've got time to switch across to the charts. What I wanted to do is to offer, traders just, a kind of a very simple opportunity to sort of trade these cryptos. Now, last month, as part of the Value Trade series of webinars, we talked about an introduction to price action trading. And, here we are, we're just going to build on that. I'm just going to utilize one or two very, very simple ideas that we can take on board to give us an opportunity to actually trade cryptocurrencies. As we said in the last slide, simple technical analysis has been working well. What we find is that, levels of support and resistance have been working well. If you perhaps use supply and demand, if you're able to understand that, if you're able to identify order blocks, and in particular, big round psychological numbers, they have also been very, very key. Not surprisingly, if you remember, towards the last sort of 3 to 4 months of 2017, well, then, people were talking about how how Bitcoin, had broken $10,000, $11,000, $12,000, $18,000, etc. Big round, those psychological numbers. And when we've seen the downtrend for the last 2 months, well, then invariably 10,000 was it's a line in the sand. It's that psychological number. And so, it's important to take these on board to understand them. And then what we see is when prices at those levels, support, resistance, supply, demand, the big round psychological numbers, then, we can look for a very simple price action trigger. We just want to keep us something, it's a very nice, simple opportunity. So here's a very, very simple way as a sort of a trigger for your trades. It's something that, I like using across all of my trading, which is a key day reversal pattern, all right? Which, although it's called a key day reversal, can actually come across all time frames. And in particular, what I've particularly liked across the cryptocurrencies is on the 4-hour charts. They do happen rarely, all right? And, because they happen rare, well, that gives them a little bit more credence, a little bit more credibility. They can signal the end of a trend. Ideally, they will signal the end of a trend. And not surprisingly, the higher the time frame, the more validity. And that's the same for whether you're trading euro dollar, the NASDAQ, gold, or Litecoin. Okay, the higher the time frame, the more validity. What it does do is it provides clear proof that the previous trend is either over or it's very, very close to its end, and that we may be seeing a reversal. And when we actually start to see, as I said, some of the volatility within those cryptocurrencies, well, then this might be an idea or an opportunity that draws your eye towards providing you a trading trigger. So, just actually before I go back, this we can see here, maybe we'll have a little look at the charts as, what I have here, Bitcoin against the US dollar, the 4-hour chart. Hopefully you can see that, there were sort of 3 key day reversal, sort of setup signals there that, signaled either, a move in a particular direction. Okay, and what we'll do is we'll have a little look at 1 or 2 of those opportunities in the next few minutes. So what is a key day reversal for those of you who are completely new to trading? Well, it's normally a sharp reversal pattern that occurs at the end of a trend. So in an uptrend where price has been moving higher, prices open above the previous day's close. It makes a new high, pushes to a new high, and then it reverses and closes below the previous day's low. Okay. So, that's it. In an uptrend, it pushes higher. Okay. And then it actually closes beneath the previous day's low or close. In a downtrend, prices open below or alongside on the 24-hour market. Okay, the previous day's close. Then it pushes to a new low, makes a new low, and then closes higher than the previous day's high. The greater the price range and volume of the key reversal day, the more reliable the signal. As I said, they don't happen very often. They don't happen at the end of every trend. But when they do happen, they can be very clear signals that give us a very clear trading opportunity. And it's a very simple pattern to see, to learn, and to recognize on a chart. Hopefully you can see there on a chart there after a very long and strong uptrend where we had a particular, really strong key day reversal there, right? 24-hour market, so price actually opened at the same price as the previous days or session or, close, and made a new high, and then it reversed, fell away, and still closed beneath the previous day's low. That's think about the psychology of that. The psychology of that in that particular instance is price has been rising up, and then the bears have stepped in, and the bears have wrestled control of the market, and that's what we're interested in understanding. So here's some examples on Dash. This is Dash against the US dollar. As I said, the 4-hour chart has provided these some nice opportunities. Okay, they don't happen very often, but when they do happen, they can be quite nice opportunities. Once you start to learn and understand the pattern, it becomes quite simple to recognize. Here we had across on the as I said, it's Dash against the 4-hour. After a little bit of a price rally, price had been in a downtrend, price rallied up. Okay, then what happened is price pushed to a new high, and then it reversed, and it closed all the way down to the low. And why don't I just try? We've got all these super little tools. Why don't we use them? Price pushes to a new high, but it reverses, closes down to, and it closes. It's a very strong close, and it closes beneath the sort of the low in the close of the previous day. Then we can see that actually price pushed on. Price pushed on until it was ended by a candle that opened the same as the previous one. It pushed to a new low, but then actually reversed, pushed all the way higher and closed higher than the previous day's close. Okay, previous day's close and high. Remember, it's the reversal. Here is where the bulls stepped in and they wrestled control of the market. And what do you know? Off it shot. Price got back up to this kind of area level, and then, it was in a nice uptrend right up until we had another key reversal. Okay. Price has pushed to a new high. Okay. But actually closed right down on its lows and closing beneath the low in the close of the previous day. And then we actually had a session where we actually fell down for a year for what was that, about 6-7 sessions. So hopefully you can see there, okay, there's just, there's some simple examples there, okay. As I said, you'll see these across all time frames. But actually what we're looking for is, the higher it occurs, okay, the higher the time frame, the more validity it has. But when we know that cryptocurrencies have, strong moves, they can have strong volatility, being able to learn and recognize this pattern is a way and a means to sort of just give yourself a quick, simple trading opportunity. So, just towards finishing up, cryptocurrencies, so what? What does the future hold? Well, we touched on a little bit earlier in terms of protecting rights through immutable records, being able to sort of help create a true sharing economy without the ability for people to manipulate and control. But it'll get towards ending the delays and costs of remittance payments, and that's what we're starting to see in certain parts of the world already. It enables citizens to own and monetize their data whilst actually protecting their privacy, those property rights, okay, whether it be physical or intellectual, become, enormously important. What that does, it helps ensure compensation for the creators of value. And with that, what we're going to see, and what we've already seen, is that it's creating a new generation of entrepreneurship. And what that's going to do, I believe, is that's going to cause governments, democracy, and institutions forced to address and to reinvent themselves. So that's what we see in, let's say, the bigger picture for cryptocurrencies. But, in conclusion, as we said right at the start, 2017 was the year of Bitcoin and crypto entering that public consciousness. There has been a significant reversal since the highs of December 2017, and so the investors in Bitcoin and other cryptos may well have been struggling. However, we're traders, and what we want to do is to be able to find a way to actually turn that into an opportunity. Speculating on the long-term future of an investment in crypto is challenging, okay, because the situation is changing rapidly. But as we've talked about here, there are always opportunities to trade crypto, to be a crypto trader. Value Trades now provides access to the major cryptos to trade. Okay, we've got Bitcoin, Bitcoin Cash, Ripple, Litecoin, Ethereum, and then the last one, which was what was the last one? Has been a long session of those 6 that we had there, able to sort of to trade. And then, as I said, we'll look at them. We prepare yourself for the volatility there, okay? We have to embrace that volatility. Within that volatility, there is opportunity. We looked at how, technical analysis and price action is still working well within those markets. So with the last few minutes, let's take a quick look at the MetaTrader 4 charts, and I'll take, any quick questions we have towards the end. I hope that's just given you a little bit of an insight, okay? A little bit of, insight into cryptocurrencies, blockchain, how people are investing in them, but also how you can trade it and what value trades are looking to offer. And if you just bear with me a moment, I'm going to try and switch across to the Value Trades MetaTrader 4 platform, and we'll spend a couple of minutes just bringing you up to date on on what's available. So here we have, hopefully you can also see my screen, hopefully you can see my charts, and what I have here is, I've just got a standard MetaTrader 4 platform here, okay, but what I have done is I've created a crypto profile here, okay, and you can see what I have here is I've got some of the major ones here that are available. All right, it was Dash was the last one that I forgot. I apologize. It's been a long day, traders. All right, but what you can see here, hopefully, is that if I'm just gonna zoom in here a little bit. Zoom in, let me just show you this, is that here on the top I've got eight of the currencies. What I've got is 4 across the top, which is here. I've got Bitcoin against US dollar here on the 4-hour chart. Here I've got Dash, okay, against the US dollar on the 4-hour chart. I've got Ethereum here on the 4-hour chart. against the US dollar, and I have Litecoin here, okay, on the 4-hour chart. Here you go, also. And in the bottom left, I have also got Ripple, okay, Ripple against the US dollar on the 4-hour chart. Then what I've also got here, as I said, I've got Dash against the US dollar here, but I also have Dash against Bitcoin here. All right, so I'm just going to, let's maybe just zoom that down to the 4-hour. So you can see that, the difference in trading Dash against the US dollar and Dash against Bitcoin. I've got here Ethereum against the US dollar and Ethereum against Bitcoin. Bring it all down to a 4-hour chart, shall we? And then also have Litecoin here, okay? Litecoin against Litecoin against Bitcoin as opposed to Litecoin against the US dollar. So I touched upon it a little bit, as I said. Some people would like to arbitrage their exposure between Bitcoin and US dollar. Realistically, what we're looking for is that, as a CFD, as a trader, we're just looking for opportunity, ladies and gentlemen, okay? We're just looking for opportunity. That's what we're particularly interested in, okay? And so, as I was saying on the 4-hour chart here on Bitcoin, what I'm particularly looking for, excuse me, is, I'll just take a sip of water there, is that, I'm looking for, when there have been good trends, and, I'm interested when that trend closes or completes with a key reversal pattern, where price is pushed to a new high and then closed down, okay, reversed, closed on new lows, okay, closed lower than the low, preferably the low in the close of the candle beforehand. You can see that it occurred here, okay, it actually occurred 4 times there that we've seen. We had one here, okay, which, we did get a short move down, but actually it reversed and fell up. But as I said, if it doesn't signal the end of the trend, it signals the end of the trend is close. And actually what you can see is this is a 4-hour chart. So within 2 days or so, 2-3 days, 2.5 days, that long uptrend we'd had completed and rolled over and fallen away. And it was finished by the actual further key reversal. Price fell down. It hit the 50-period moving average. It bounced off it a little bit. Once again, we had, a key reversal. Price pushed to a new high, but closed on its lows beneath the low in the close of the previous candle before we had a continuous move down. And what did we see that actually ended that nice strong move down? Well, here we have is, a key reversal. Price pushed to a new low, but actually it reversed. The bulls stepped in, they took control, and then basically we closed higher than the high and the close of the previous candle. And invariably what we saw there was a move on. And those of you who understand technical analysis, might have actually have seen that, that invariably what we saw there was a little bit of a 4-hour head and shoulders pattern there as well, which is perfectly acceptable, sort of trading idea, okay, we'll find for cryptos. As I said, what we've been finding is that, invariably some of just standard, simple technical analysis have been working very, very well with a little bit of the price action trading opportunities. So what I suggest is if you haven't watched it yet, go back and watch the January webinar, which was about an introduction to price action trading, and that will give you a little bit of an insight. So as I said, because these key reversals, when they happen on higher time frames, so 4-hour, daily, weekly, etc., they tend to have more validity. It also means you're not having to sort of sit and watch your charts every minute of every day. I appreciate that some of the people will be around watching, trading around their, let's say, their day job. So the ability to trade on 4-hour, daily, weekly charts actually allows you to sort of trade around your day job, okay? And it means it's a lot more accessible in terms of ways and means to trade. So, hopefully what you can see there is, we're seeing that, for example, Bitcoin here, okay, is, let me just zoom out here a little bit. What we can see is, this week, we've had, Bitcoin has been strong against the US dollar. It's been strengthening. It got back up above that 10,000 level, all right? Back above that 10,000 level. So, what we've been seeing is, we've seen Bitcoin strengthening against the dollar, Dash strengthening against the dollar, Ethereum strengthening against the dollar, and also Litecoin against the dollar. Ripple was a little bit sideways, but in the last day has managed to join the party and has been a little bit strength against the dollar there. And that's what I was saying, people might say the arbitrage, because actually, when we look, Dash has actually dropped against Bitcoin. Ethereum has dropped against Bitcoin. Litecoin is dropped against Bitcoin. And what that tells me as a trader is that, Bitcoin is, there's strength in Bitcoin this week, okay? There's strength in Bitcoin, and that's been, we can see that from our own price action, price above the 10,000, price being up in a nice move upwards, okay? So we can start to utilize all of those particular different cryptocurrency elements to start to build a picture about, where we want to sort of focus our efforts and where we're actually looking to sort of, where the best opportunities might well be for as we're crypto traders. So there you go, ladies and gentlemen. I hope you found that interesting. I hope you found that gave you a little bit of insight. We've covered quite a broad spectrum. As I said, I appreciate that. With the people we have in the room, there'll be a spectrum of people's understanding and knowledge of both cryptocurrencies and also whether to be an investor and whether to be a crypto trading. And, as I suggest, the Value Trades offer an excellent, demo account here on MetaTrader 4. So that might be an idea for a way to start, actually just to get some exposure, bring up these great instruments, set yourself up a profile like I have here, and you have the opportunity to sort of, to try and trade, just see if you can identify some of those key reversal patterns. Maybe you can identify some other particular price action patterns around particular levels of support and resistance, or big psychological numbers, or understanding elements like supply and demand and order blocks. I hope you found that useful. I wish you the very best of success in your own trading, ladies and gentlemen. And I look forward to speaking to you at the next Value Trades webinar. Many thanks. So Tradesman's just asking a question there about perhaps some of the differences between trading products in terms of the sort of spreads between particular brokers, where the sort of, let's say, trading a FX pair, euro dollar, might be a little bit different. The spread is pretty consistent, whereas actually sometimes the spreads can be a little bit different for brokers offering Bitcoin. Well, I think what you're looking at there is you're looking at the sort of individual brokers and their particular approach that I have seen. I have seen people offering Bitcoin with a spread, of sort of very relatively sort of tight spread, okay, of around about $20 difference, $20 to $30 difference. Some of them offering a spread of around about $150 difference. I think, what I can talk about is from my own experience as a trader. So, when I first started trading, spreads on, let's say, instruments like pound against yen, pound against Swiss franc, they could sometimes be between a minimum of, let's say, 10, 12 pips up to maybe 24, 25 pips. But as those products became, let's say, more mature, as there's more interaction, as there's more engagement in those particular instruments, what we saw was, spreads became a lot tighter. And I think what we're finding is, as we're starting in a new, what is, in some respects, a new asset class. As brokers are bringing these to markets, what they're doing is they are dynamically operating and updating their ways of offering these products to clients as a way and a means to give traders exposure, but also recognize that there is a good deal of volatility, and there is an element of immaturity in it as an asset class when you compare it to stocks and the FX market. We also have to realize is that, even though we've seen fantastic growth in trading of Bitcoin alone, in terms of the volume of Bitcoin, it's still minuscule compared to trading in even something like the Swiss franc, okay, probably the smallest traded of the majors, right? So even though we've seen massive growth, okay, in Bitcoin, it's still, a drop in the ocean compared to what we see within the FX markets. But I think that as those markets as become mature, as they become more stable, as brokers get to understand the implications of operating within them, I think what we'll see is much tighter, a much tighter spreads and much more opportunity provided. So Desiree and Jonas say, yeah, great webinar, very informative. Yep, you're very welcome. Thanks very much. Fabian says, thanks, Mr. Wallace, for your webinar. It's been interesting. Thank you, Fabian. That's very kind of you to say. Okay. And when can you trade crypto? They seem to be moving on weekends. That's a very good point. And what you'll see is that with a lot of cryptos, they're operating in some respects almost in a kind of 24-hour, 7-day market. Okay, and that does provide, as always, that provides opportunities and threats. And that's a little bit about recognizing what's the what suits you for your personality. Some people might only be able to trade at a particular weekend. Others might actually, have to sort of, as I say, have the challenge of trading around a particular day job. And that's a particular individual requirement that would need to be considered. Okay, everybody. I hope that was of interest to you. I hope that gave you some interesting and some insight. And as always, I wish you the very best success with your own trading. And I look forward to speaking to you in the future. Many thanks.